Hello. Welcome to our next chapter, that is your Ind AS 10 for events after reporting period. This is also a very small Ind AS. So events after reporting period, say your reporting period ends on 31st March, but your balance sheet, say for example, are approved on 31st July. So now the period between March and July, if there are any events, any major significant events that happen after 31st March, but before 31st July, this is the period that we are talking about, that is events after reporting period. Now the question arises that does this events include both favorable as well as unfavorable? So yes, it includes favorable as well as unfavorable events after the end of reporting period, but before the date when financial statements are approved by the board of directors. So our reporting period is 31st March before the date, and your date of approval in our case was 31st July. So any events between this period are called events after reporting period. So now there are two types of events. First is your adjusting events, and second is your non-adjusting events. That means certain events we will give adjustment to. Because of certain events, we will give adjustment in the balance sheet, while some events will be ignored. That is, no effect will be given in the balance sheet. So adjusting events are those events which provide evidence of conditions that existed at the end of the reporting period. That means they provide evidence of conditions that exist at the end of the reporting period. That means the event happened later, but the conditions existed on the report at the end of the reporting period. So adjusting events, we will adjust your financial statements as well, and we will give disclosure. We will do both of them. So say for example, settlement of court cases after balance sheet date. So because this court case already existed at the end of reporting period, just that the result came in the end, so therefore settlement of court cases, this will be an adjusting event. Next, assets sold before year end, sale price determined before financial statements are approved. So asset was sold before the year end, but the price was determined later. So therefore, this also is an adjusting event. Next is fraud or error detected after the reporting period. Any fraud or error detected will be an adjusted event. Any information received after reporting period with respect to impairment. So if you receive any information with respect to impairment, that will be your adjusting event. Next is sale of inventory that gives evidence of net realizable value, because you value the inventory as we studied in Ind AS 2 at cost or NRV, whichever is lower. So if the NRV that you had estimated versus now the inventory was actually sold and it was sold at a much lower price. So in such a case, it gives the correct evidence of the net realizable value. Then you will consider this net realizable value while valuing your inventory. And last is any incident affecting your going concern assumption. Very important. If there is any incident, suppose any fire in major plant, if it affects your going concern assumption, then this will be definitely an adjusting event. Okay. Now coming to non-adjusting events are indicative of conditions that rose after the reporting period. So what is important is over here it is at the end of the reporting period, and over here it is after the reporting period. Now in this case, you will only give disclosure. Only disclosure will be given. Over here you are adjusting financial statements as well and giving disclosure. Over here only disclosure will be given, and that too only and only if it is material. You will give a disclosure only if it is material, otherwise you will ignore it. So first is your any reduce in fair value of investments. Any business combination after the end of reporting period for which the agreement was after the end of the reporting period for which agreement was also after the reporting period. That means if the business combination was after the reporting period and the agreement was also after the reporting period, then in such a case, this will be a non-adjusting event. Next is any destruction of major production plant by fire. This will be a non-adjusting event. But if this leads to going concern being affected, then in such a case, this will be an adjusting event. Next is any changes in tax rate. Any dividend announced after the reporting period, if the dividend is announced after the reporting period, in such a case, it will be a non-adjusting event. Any abnormally large changes in asset prices or foreign exchange rates. So because if you have foreign operations, if any of your receivables payables are in foreign currency, and if that rate has changed significantly, then it can be a non-adjusting event that requires disclosure provided it is material. And with this, we are done with this chapter. These are just certain examples. Only do the question bank, and your this chapter will be good to go. And I will see you in the next chapter.